Welcome to another session of personal finance training. Today we're going to be looking at Bitcoin, cryptocurrency. It's hot right now and we want to see what is going on. And we're going to observe it over the last 6 months to see what we can learn. This is presented by Accounting Lecture. Like, share, subscribe. Okay, so let's go into what is happening with cryptocurrency. Okay, so here we can see that in 6 months ago, Bitcoin was trading in pounds. Now I'm based in the UK, so it's trading in pounds at 8,892.85, and it went as high as 9,076.68 and as low as 8,823.70. So we can see here 8,000 to 9,000 is the price that Bitcoin is trading at, was trading at 6 months ago. Now, if we were to use a rate of exchange of 1.2925, 6 months ago, the exchange rate was weaker in terms of looking at the pound side of it. And so we can see here that the open would be 11,494, and it went as high as 11,731.61 and as low as 11,404.63. Now, it is important for us to understand the volatility. Now, if you bought in at the open, the high, the movement in terms of the high, the range there is 237.61, so you'd have made 231 on the same day. But if you bought at the high, which sometimes occur, because sometimes people may think that the market is gonna keep going up and then it just turns the other way and it goes down. Now, if it goes down, the low here would be 326.98. So 326.98 if went the opposite direction. So moving up from the open up about 200, coming down from its high is about 300. So the volatility between the two movements we can see maybe is about 100. So it's not a significant gain compared to the investment, neither is a significant loss. But let's see what has happened as the months rolled on. Now, I'm just going to look at what is the situation a few weeks ago. So the early part of April. So in April, it opened in terms of pounds at 41,549.80. So and then it went as high as 42,912.37, and then low as 40,701.67. So we can see here it's 41, then it's 42, then it's 40. So 40, 41, 42, 40. That's the kind of figures we're seeing in terms of pounds. Now, using an exchange rate of 1.3833, that works out to be, the open was 57,475.83, went as high as 59,360.68 and as low as 56,302.62. Now, the volatility here would be 1,884.85, and the volatility on the low is 3,058.06. So we can see here that the spread here is quite, the range is quite wide, and as the price of the currency goes up, from a micro perspective, the losses could be significant. I mean, it's important to note that if you were to buy at the open, you'd have made 1,800. I mean, if you bought at the open in the very beginning, we spoke about it, was 300, but buying now at the open is about 1,800, so it's quite significant. But then the fall, if you were to buy at the high, is 3,000. Now, you might be saying, why would you buy at the high? But it happens when people investors may think that the currency is going to keep going up, and then the market changes. You might have a situation where it's quite different from what it was. Okay, so let's look at the current situation. So as at the 19th of April 2021, it's open at 41,166.75. It went as high as 41,443.49 and as low as 4351.12. So we can see again it's hovering around the 41 and 40. So between 41 and 40 is what's happening currently. Using an exchange rate of 1.3809, we can see that in US dollars it will be 56,847.17 and 57,229.32 and 55,720.86. The difference, and this is important to note, the difference currently with its high and it's open and its high is 382.16. But the difference with its high and its low is 1,508.46. Now, that is saying to me that it's likely that we're going to have a correction, a major correction, possibly taking place, because it's falling lower than its opening, so we can see that there's a possibility that investors might be pulling out profits at this time, especially if you've maybe invested several months ago. You might be wanting to take some profits now. Now let's just look at if you were to be one of the lucky investors to have invested 6 months ago. If you had invested 6 months ago, in terms of US dollars, you would have made 45,353.17 if you were to have invested at the open price, or if you had invested at the high, which does occur, it would be 45,497.71. And if you had invested at the low, it would be 44,316.23. Now, what kind of return in terms of percentage? We can see that it would be a 394, 387, 388. So nearly 400% return on investment, which is significant. Anywhere in the world you get 400%, that's really good. And that is working out to be about 3.4, nearly 4 times. So again, four times would be what you'll be expecting in terms of return. So again, quite significant. The market is quite bullish. So over the last 6 months, it's very, very bullish. I can see some bearish moments, but let's have a look at the graph, because maybe we could actually see it a little bit better. Now, if we were to look at the graph, we can see here that it went high, then it fell, and then went high again, and then fell and went high. But the falls in recent times is quite shallow as compared to the falls that we've had before. That is because, as you know, because we have a pandemic taking place, a lot of investors right now are looking for other alternative methods to invest, and so maybe that's the reason why we have such a huge increase in the share price, or not the share price, but the currency. I'm always talking about shares, so I just had a moment there where I talk about share again. But the main thing is that we can see that the currency changed significantly due to the market conditions being favorable for the digital currency market. Okay, but let's look at the last month. We can see again, we have peaks and then falls. Again, it's seeming again, we can see even more closely that the falls and the drops are not as deep as we've had in the past, which means that the market is somewhat accepting a price of around 41,000, 42,000 thereabouts. So the price of 41,000, 41 1 or 41, 41 or 40,000 would be somewhat what the market's accepting, which works out to be 57,000, 56,000 and 57,000 and maybe 55,000. So if you're wanting to make a quick profit, 55,000 you know, you might want to go in there and come out at 57. But if you're lucky enough to get in below 55, then you possibly could get a quick return and come out. But you remember, when you're making these investments, that you will get charged every time you buy and exit. So you might need to take that into account. But a longer term strategy would be to invest for, you know, several months. So these are some of the things we can observe. I hope this is quite informative. I know it is informative, and I hope that you will like this, share it, and subscribe. Thank you.